Silver has just crossed the $100 per ounce mark for the very first time. What's driving the white metal into triple-digit territory? Is it a simple safe haven demand or something deeper like weak currencies, supply shortages, and shifting industrial trends? Over the next few minutes, let's try to unpack all that is behind this massive surge in silver prices and what does it mean for your investments. It is a time to make the strategic shift for gold from silver. Joining me on the show is Kunal Shah, Head of Commodities Research at Nirmal Bang. Welcome, Kunal, on the show.
Hello, how are you?
I'm good, Kunal. So let's begin with traditionally gold and silver are seen as safe haven assets. So what triggers this behavior in markets and why are the investors flocking to them now?
So first of all, it's a time when it's an unprecedented time in our times because for the first time in my 20 years of career, I've seen this kind of scenario developing where the physical market and futures market, there is a complete distortion between what is happening on the futures market and what is happening in the physical market. So just to give you an example of what I'm trying to explain you, the silver on in the physical market is the discount is as high as 12,000 to 13,000 rupees. On Indian commodity futures, MCX, the prices are having built a premium of roughly $8 to $9. So as compared to the COMEX, silver prices in India are on the MCX are trading at 9% premium than what they are trading on COMEX. And in physical, there is a discount. So there is an unprecedented level of buying going on in the futures platform. There is a rush right now by the investors, by the retailers, and the market participants. And I do not basically can give you an exact reason in terms of what is happening, why there is a big difference between physical. Maybe people are expecting the duties to go up. Or something in the budget may come which can trigger domestic prices higher as compared to the international prices. But the fact remains is the de-dollarization trend, the supply side bottlenecks in the silver, and the rising demand. That has been the main reason why silver is trading the way it is right now. So from here going forward, we believe that the way silver has outperformed gold in last 6 months, that outperformance can be fading gradually, and we feel that gold is likely to outperform going forward during next 6 to 8 months. So right now, the geopolitical landscape of the global economy is worsening. We are at the cusp where Iran, US, Israel, they can enter into a major geopolitical event. There is a friction between UAE and Saudi Arabia right now. China, Taiwan is also developing. Russia, Ukraine is ongoing. So it seems that the geopolitically we are, if any of these four events which I am mentioning, if it is escalating, then people will have no choice but to remain in gold. Second, European economies are now talking about going away from US Treasury, selling US Treasury and buying gold at this level. At $4,900, Poland, Denmark, they all are talking about adding gold. Poland is talking about adding 150 tons of gold at this price. So, like I said, everyone wants to get rid of US Treasury bills, and at the same time, they want to divert their foreign exchange reserve into gold or perhaps even silver. In case of some of the big investor like Saudi Arabia also wants to have silver in their portfolio. So this is really a difficult time. If somebody wants to enter in, they have to make a choice that if they are entering right now, there can be a bouts of correction, there can be a bouts of profit taking. But even though at this level, we feel that there are no reasons for me to be bearish. Either you book profit or you stay invested. No point in going short.
Kunal, taking cue from what you have said, how much of this rally is actually related to the movement of dollar, as you talked about de-dollarization, and what are the expectations around the interest rates from here?
Okay, so right now, if you look at the dollar index, after the Bank of Japan's talks of intervention, dollar index yesterday weekend, but broadly speaking, after making a low of 96.60, dollar index is still trading higher. So 2025, the low of the dollar index was 96.60, and if you look right now, it is trading at 98. So dollar is actually strengthened. The problem is that everyone wants to get rid of the paper currency, the dollar, or perhaps the yen, or the currencies which are having the high debt. People want to get rid of them, but there are no other alternative currency available where they can put their money in. So if I'm an investor and if I want to get rid of the US dollar, what are the other currencies? Yen, 240% of the GDP, the debt to GDP ratio is 240%. So Europe, roughly near to 100%. US dollar 130%. So all the G7 economies are have piled up tremendous amount of debt, which makes their currency underperforming going forward. But there are no other currency to take over the dollar right now, and that's the reason why gold is emerging as a alternative currency right now. So just because there are no other currency available where you can divert or you can start,
Correct.
and that's why gold automatically is emerging as a
Yeah.
alternative currency, and
Yeah.
that's the reason why gold prices are moving up the way it is
Yeah,
moving. I mean,
yeah.
uh,
But Kunal, what is the reason for silver prices also to inch up? Because see, I understand both these are precious metals, but
hmm.
silver prices have not seen such an unprecedented move earlier. So, what kind of reasons are there for the move of for this kind of a move in silver prices?
Okay, so there is a thumb rule in commodity. Whenever there is shortages developing, okay, and the big shortages. So silver was having a shortage of between demand and supply. The gap was as high as 15% for 10 to 15% over last 4 years. Okay, so whenever these kind of acute shortage developed, followed by a strong demand, the prices, the upside momentum you cannot predict, and that is what has happened with silver. So we were expecting silver to go up to $80, $85, and right now we have at $103. So the quantum of upside in a scenario of shortages can be very difficult to predict, and that is what is happening. But now at these levels, a lot of solar producers, the demand from there, which has been a major driver of silver demand, I think there we are going to see a lull, or they may look for the alternative. So right now, going forward, the demand destruction may take place at this kind of levels. That is one thing to watch out for. And till that take place, still there are shortage in the market. So right now, if you own silver, then you can sell it. But if you don't have silver, how are you going to short it? What if it goes up by another 10, 15, 20%? Because the way it is moving up these days, every day you start your day, it starts up with a 5, 8% gap of opening.
Yeah,
So uh, these are either you book your profit, okay, if you bought it
yeah,
$20, $30, $50, $80, and right now it's at $104, either you book your profit,
yeah,
but there's no point in entering in long position right now because Indian markets are already trading. I'm talking about the MCX price are already trading at a premium of
yeah,
roughly 30,000 rupees
yeah.
versus the comics prices.
Correct.
So no point in buying at these levels.
Yeah,
Wait and watch is my recommendation.
yeah.
I would not recommend to go long in silver at these levels.
Yeah. Kunal, so there are certain central banks which are increasing their gold holdings at this point. So does this signal a lack of confidence in the kind of traditional systems or currencies?
So I think the major headline of the 2026 is the crisis in the bond market. Okay, the way this year US $9 trillion of debt is maturing, and Japan, we all know the debt to GDP ratio is 240%, and their bond market has become absolutely illiquid. Okay, so if the Bank of Japan comes and buy, then only there is a liquidity in the market. So right now the major headlines for the 2026, the possibility of crisis in the bond market, and if that takes place, the entire financial system may get turbulent time if that happens. So that is the reason why people want safety, and Bitcoin definitely not a safe is a safe haven. So right now there are no safe haven available. So if I am a central bank, if I want to diversify my foreign exchange reserve, so from the year 1995 to 2015, US Treasury was my safe haven. I was whenever I wanted to invest my money, whenever I want to invest my surplus, it was the US reserves. But what has happened post COVID, their debt level has expanded every year by 1.5 to 2 trillion dollar, and right now we are sitting at a $39 trillion debt. So who is going to invest in US bond at this juncture? There may be a point. If you see what is happening in the year 2025, the interest rates have been coming down in the developed markets, but the 10-year and 30-year bond yields of the developed market is been rising at a rapid pace, and central banks have to intervene to bring those yield down. So they print money, they bring the yield down. Again, the inflationary expectation moves up, the yields are again up. They again print money, the again yields are going down. So in spite of the interest rates are coming down, the long-term inflationary expectation are continuously moving up. So in this kind of scenario, where you are going to park your money? So stocks, bonds, no, not interested. So where? So all the money flow by retailers, large investors, central banks is flowing towards gold. And that is the reason why gold is behaving the way it is behaving. So the moment you think it's enough, I mean, it should go down and you see another $200 of upside. So on the merit, gold looks much better. But if you buy gold at these levels, you should keep an average. You should keep a room to average it out if it goes down due to any reason. If there is any de-escalation of any geopolitical event, so in that case, gold can go down by $100, $200. So you should be prepared to buy more if it goes down. But gold right now seems to be in a better place as compared to silver. And with this geopolitical event may unfold in future, I think gold is still going to serve the role of safe haven instrument for at least next 1.5 to 2 years.